Welcome back, peer structure traders, for another market analysis for the London session. And again, these levels potentially could hold into US session. Today is April 12th, 2021 here in Hawaii, and will be April 13th, 2021 in London. Today we'll be going over S&P 500 and also gold, giving you guys some levels we're looking to trade within the London session. And again, we could use those levels into the US session. So for those who are not subscribed to the channel yet, please go ahead and subscribe. For those who are, thank you for watching these videos. If you guys do enjoy them, please go ahead and smash that like button. If you guys have any questions, feel free to pop them in here on YouTube. We would love to get back to you guys. If you guys are interested in joining Pure Structure Trading, feel free to pop in on our website and we will go ahead and get back to you guys. You can email us. Again, you can put any questions you have here on YouTube. Again, we'd love to answer those questions for you guys. And thank you guys so much for subscribing and watching these videos and liking them as well. So let's go ahead and hop into it. Again, we're going to be going over S&P first. Take a look at what we had for S&P 500. We did have a slight range day. We finally popped up against our resistance and through that and got through those 21s. But for the most part for today's trading, we did see sideways movement. You could see that we had rotations come into about 4106 and then push all the way up to our resistance at 4119.50. And honestly, within the beginning of the US session, the first hour or so within the trade room, we were trading right between this level here, right in the middle of this range here. And then we started to pull up to our resistance at 4119.50. And then we drop right back down from there, and then we get the bounce right around these 10 11s, started to rotate between these levels and then finally pulled down. I like the exhaustive level between 4104 to about 4106. You can see that was one of our highlighted supports at 4106.25, which was a very nice bounce off that level and then a move right back into the resistance. But you can see what happened. We got into the resistance, came back into the middle of the range, and then from there we targeted the upside. So we do have the market popping above these 4119.50s. And again, we are bullish. We want to keep that in mind. We are still bullish on S&P, but we did go into the range. So there's a couple things that could potentially happen here on S&P 500. But let's go ahead and play out some scenarios. We could use this area right here at 4119.50 as support and look for the market to try to climb. Again, though, it didn't really break too much for me to want to continue the long from this area. Going to be a little bit more risky to try to do it from this top area to continue up, but not to say that it can't happen. Price may want to try to move a little bit deeper and then try to attack the upside from there. We do have our measured moves right around 41.31.25 as a measured area for those buyers. Once we get through that level, we could see potential movement into 35 to 36 on the top side. But there's also another move that could potentially happen. We could actually start to break down on this level. If we can't get past these 24s, you could see the market try to break down here and then move its way back into the middle of the range. This middle of the range is going to be the magnet for these sellers to come into if we get back below these 4119.50s. If we do get to that little middle of the range, again, we could see this rotational movement happen and try to either retest the upside or get back down to the support here at 4106.25. However, if we do get down to the bottom at 4106, we could see that support here, or price could actually break down and come to another level of interest for me, which is going to be right around those 40.99s and below that 40.93 as another level of support. So we do want to pay attention to what we got there. Again, we could potentially go into a range again in the London session and even into the US session. So you want to look out for these key levels. How you would trade a range again is you want to sell high and buy low. So right now we are above our resistance level, not necessarily breaking it with a convincing break, and we could see this thing start to turn down and then try to make its way back into the middle of the range. So if you are looking to short, this is going to be a good area to short back into these 11 to 12s as that mid area. Low side about 10, but you get down into support right around these 06s, could be our first area we're looking to test and try to make that move back into the middle and to the top of the resistance. If we can't get it to break up higher, you may want to look for this thing to try to come a little bit deeper. Right around these 40.99s may be a great area for us to look for the long. If we try it one time, two times, get a nice double bottom move, fails to go down, and then we can get that move right back up into the middle of the range again. So we see a couple different opportunities that we potentially could have here on S&P 500, but I'm not too keen on buying right off this area. In fact, I'd rather have it try to press up into right around these 28 to 30s, then come back down, retest this area at about 19, and then look for that first pullback touch and go right into these 31s, into these 36s after. This would be a better type of pullback for me, and then a continuation of move. That would be more of an idea of along for me right here. Not to say that it won't happen off of this prior level of resistance, but it just doesn't seem too likely for me. So I'm going to look to see if we get back underneath, and I may short it back into the middle of the range if we get that opportunity. Now, what's going to be harder though is if we're still playing around, say we still play around this range, or even if price gets into this area here, we pop a little bit higher and you can see this movement happening. It's going to be a little bit more difficult for people to want to try to buy right here at the top of 24 or 25 and continue it higher into 31 because it's such a small movement, and then past 31 into 35. It's going to be a little bit more difficult. You may get more shallow pullbacks as we try to grind higher. So we want to keep this in mind. If you're not too comfortable with that, you may not want to try the minor level continuational moves. But if you are comfortable with it, again, there will be some minor levels that you can look to take off of these off this movement if we are continuing to try to grind higher for S&P within the US session. If you guys don't understand what the minor levels look like, what we may mean by those minor levels, how to trade them, again, it's best to try to ask the questions here on YouTube or to join Pure Structure Trading, get to know your mentors, get to know what we do, get to see what we do live, and get to pick our brains, also get to coach with us and learn how to read the markets the way that we read them. With that, guys, let's go ahead and take a look at gold. Well, actually, let's take a look at a smaller chart here first on S&P so you guys can get a closer view before we move over to gold. But again, you can see S&P kind of slightly holding this resistance. Doesn't look like it's getting too strong, but you can see we had a couple touches over and over again right here at these 2375s, failing to get through. So I do think we may end up trying to dip lower, but for those who like to be long, you can try this minor level right here for a move back up. It's just not one that I really care for. So I'm going to look for this thing to try to dip lower and then try to pull back into the middle of this range. So this again, you can see a little bit closer. It's easier to see the middle of this range right here, which we're targeting right around these 12 to 10s as the target level on the short side. Again, low side going to be 4106 and below that 4099 as the levels of support for our move to the downside, and then trying to get that bounce back to the upside from there. So we'll see if we actually get this opportunity as we go into the London session and even into the US session. With that said, guys, let's move over to gold here real quickly. Give you guys a breakdown on gold. Now, gold, we did have some opportunities. Not to say that gold was harder to trade today. We had some opportunities, but it was moving on the downside. Now we are still at some key levels. Now, the more difficult thing for gold would have been that as we were trying to move from a key level of resistance here down, we did have some key levels of support, which sat at about 36, and then our next level at about 31.7, which we had a couple bounces to try to take up. But when we couldn't push back through this mid level, right in between this range, which we marked, we wanted those 39s, but we couldn't get it past these 37s. That's when we knew the price was going to try to dip lower, and potentially we could actually see gold continue to try to dip lower to our next support. Honestly, I do think that markets want to try to move down right between these 23s to as low as about these 16 to 18s. That's going to be our target level when we're looking for that downside move, especially if we can't get it back through these 39s. But what are we going to be looking for? We broke down this level of 31.7. You can see we had a nice double bottom past that level, and we shot right back up. So I am either looking for this long right off our level of 31.7 if we can't break it down. I want to look for the market to try to pull back from this area back into these 39s. That's going to be one of my long opportunities here. We could actually break through these 39s and try to break back up into these 44 to about 46s on the top side here. Now, if we cannot break that move of 39 to 40, this is where you're going to actually start to see some sellers try to come in. Now, it may look something like this where we get the bounce and we try to test, but if we get one try, then we get a second try and it fails, you're going to probably see these sellers try to push these 31.7s and break to the next level of about these 1723s and then 16 to 18. That's going to be that movement. Now, we may not get it in the London session, but you gotta watch out for it into the U.S. session. If that tends to happen as we open up in the U.S. session, you want to pay attention and know exactly what you're looking for. Again, if you don't understand the movement, best not to get yourself into any trades that you're not certain about. Best to look for the same setups that make sense to you, and you continue to play those setups over and over and over again. That's how you find that consistency in trading, and that's how you make consistent profits. But again, we are looking to see if we can catch this upside if it holds these 31.7s into 39 to 40 and then get it to break up through that level. If we can do that, you may see the retest and a continuation into 46. Now this here, 46.1, may actually be a great level for us to look for the short here. We may get a nice double top right at this area and then a pull right back into the middle of the range. But just like S&P 500, we have this range of motion that we got. Now I highlighted with purple so you guys could see the middle of that range and why we would be targeting it. The middle of the range is going to be that magnet that pulls price in, right? And this is going to be where you actually may get the bounces up and also the bounces that pull price down. Again, with ranges, you want to buy low and you want to look to sell high. That's going to be our opportunities that we're looking for on these ranges. If you're looking to trade in the middle, this is where it could get really, really choppy. So you want to try to keep yourself away from this area if you don't understand it. It's best to stay away from it because you will get yourself chopped up. Now you get underneath 31.5 again or 31.7, you actually are going to see this market try to pull down deeper. Kind of like how we had in the trade room today. We did have some long opportunities off 36, did have another long opportunity off that 31.7, but when price couldn't break above specific areas that we saw 1, 2, 3 times, we did take our profits and look to see that market dip a little bit deeper, and that's where we saw markets try to pull to our next level. So we want to pay attention to that. That way we don't get ourselves caught. It's not wrong to take trades, right, that you're confident in or that you have levels that you're looking for. It's not wrong, but you don't want to hold on to trades hoping that it goes in your direction. If you have profit, take those profits, take those gains, and look to try to run some if you got the opportunity to run some lots. If you don't have that opportunity, make sure that you're taking your 1, 2, 3 points off the charts and then looking for your next best trade setup. Don't get yourself caught in trying to run 10, 20 point runners off one lot. It's no sense. That's not how you make that consistent profits every day. You got to learn to see what makes sense to you, become confident by your ability to trade it over and over and over again, to be patient and disciplined, to look for the market to set up the way that you can understand it, and then look to hit those trades. Now, whether the trade works out for you or it doesn't, once you set your process into motion and you see everything that would have caused you to want to click into the trade, that's it. You should not have any emotional tie to the actual trade. Whether it works out or it doesn't shouldn't matter. You did everything you could possibly do in your trading process. You did your market analysis, you set your levels, you look for the price to get around your levels, and then you look for the price to react or to create structure that made sense to you to make you want to click in. You look for some confirmation. It could be 2, 3, 4, 5, 6 different things. Whatever works best for you as a trader, you look for that to happen, and then you clicked in to enter the trade, whether it be a market order, a buy a bid, a buy stop, a sell stop, doesn't matter. Whatever you decide or however you decide to enter your trades, it matters, what you're looking for and how often you consistently apply that. But when you're in the trade, and whether that trade turns against you or not, or doesn't work out, there's not much you can do. You can't control the way that the market is going to move. The best you can do is try to apply your market analysis, your levels, and what you're looking for to enter the trade, and that's about it. All right. So don't get too caught up in the losses. Just be able to take those losses and not try to get yourself right back in. If you do lose, just look for the market to set up to create market structure in a way around your levels that makes sense to you, that helps you become confident in your ability to trade, and then look to trade it that way. All right. Make sure you got limits on how much times you trade, how much trades you put in, what sessions you're going to trade during the day. Make sure you put all of that together before you even decide to enter your trade. Make sure your mind is in the right state of mind, the right mindset to even actually look to trade. And if you're emotionally distraught, make sure you're just not entering trades at all. Just watch the charts, right? Watching is just as much trading as trading is, right? Because in order to get good at this stuff, everybody who's been doing it for years upon years, that does it for a living, knows this one concept, that in order to be able to be good at this stuff, you gotta take the time to read the charts. You gotta take that screen time in. You gotta apply yourself. You gotta replay the charts. You gotta go bar for bar. You gotta understand what setups work and what setups don't work. You gotta back test your strategies. You gotta see how much foolish trades you're taking. You gotta stop that, right? You gotta take away all those bad habits that you tend to have. Once you become aware of that, this is what really differentiates traders too, is once you become aware of, your bad habits, at the end of the day, it's your decision to change them, right? Nobody else can change them. So it doesn't matter how much I know about markets and understand about market structure and teach you. At the end of the day, you're the one that decides to click into the trades and that decides to change your habits. And if you're not deciding to kill that off, if it's a bad habit, and you continue to do it and do it and do it, it's not going to change. You're just going to, do the same thing over again and get the same results, right? So at the end of the day, you as a trader have to decide to change. Whether it hurts or not, it doesn't matter. If those bad habits continue to hinder your performance, you got to decide to change them. All right, so back to this, guys. For gold, again, we are looking for this bounce right now off of 31.7. If we get structure to hold here, we are going to look to see if we can get an upside move into 39. If not, we may break down and then look to grind lower into our supports at 23 and then 16 to 18. Let's take a look at a closer view here on gold as we wrap it up here, guys. For this, let me pull this over. So again, you can see right here on these charts, we were grinding lower and we are looking to try to retest this support again. So we're going to zoom it in a little bit closer. Again, we're a little bit below 31.4. We do want to see if this price can actually hold. It does look pretty bearish right now. Couldn't get past this level here. We may see the market try to grind lower from here. But again, this is what we look for. We actually look to see the market hold our specific levels, and if it's not holding our levels, there's no sense in actually taking a trade. So we'll see. If we don't get any support, we may actually look for a short to continue lower. Again, we are moving in a bearish move right now, though the longer term, when we zoom out of this whole thing, is strongly bullish as of right now, and we're coming into major levels of support. We are breaking down these major levels, and this double bottom below an actual support does to me mean that we may end up moving a little bit lower into our next support level at 23. So we'll see. Now, if price by the time we open the US session cannot break below these 31s, this more than likely is going to drive me to take a long back to the upside. And again, within that US session, we may even see the market try to trade within this range. So we always want to keep that in mind, guys. With that said, guys, that is it for S&P 500 and also gold. If you guys did like these videos or do like these videos, please go ahead and smash that like button. If you're not subscribed to the channel yet, please go ahead and subscribe. For those who are and watch these videos and again, like these videos, thank you guys very much. Appreciate that. If you guys have any questions or any feedback, please go ahead and pop them in here on YouTube. If you guys do want to join Pure Structure Trading and learn how to consistently trade and find profitability in these markets, go ahead and pop into our website. You can email us. You can even put some comments in here on YouTube if you want. Other than that, guys, we're going to call it a night. Thank you guys very much. You guys have a great night. Trade well.